On this Friday, we're finishing up with Mike Church of Addison Capital and his #1 moneymaker.
Have you know they're all women in the control room. When most investors think of investing in gold, they usually think ETFs. But how about investing in physical gold?
Right, the actual stuff. One company is making that a lot easier, in fact, more easier than ever for an average investor to not only buy the physical commodity, but to store it as well. Because you need a lot of security. And he is Savneet Singh. He's the CEO and founder of Bullion International. Good to see you.
Thanks for having me.
All right, let's talk about how your operation works. If I want to buy a couple of bars of gold, you make it happen, but I need to know what the price is, don't I? Is this just your basic spot gold price that I'm paying?
No. So what we've done is try to take an over-the-counter market and put it onto a technology platform. So traditionally, when you want to buy a bar of gold or a coin, you're calling coin dealers, you're going to these online websites. There's not a lot of transparency. And so what we've done is partnered with some of the largest gold dealers and refiners so that people can literally electronically place an order. So just like you type in a ticker for IBM, X amount of shares, with us you can type in, I want 5 bars of gold stored in Zurich. The order hits our system, we bid it out to our market of dealers, and whatever dealer bids the best price gets the transaction. So we make it very, very easy and transparent to the end user.
Are the dealers the one who store it? And if not, how do you get involved in the storage?
Sure. So we coordinate the storage with 2 non-bank vaulting providers. So we currently offer storage in New York, London, Zurich, Salt Lake City, Utah, and pretty soon in Asia as well. And we chose non-banks because we didn't want to be tied within the banking system. So the client picks where they want it stored. We purchase the
So it's a client's choice.
It's absolutely the client's choice. It's their metal. If they want it shipped to their house, we can ship it to their house, or we can move it from location to location.
You got into this business because you felt that there were a lot of rip-off artists out there. I mean, let's call it how we see it. The numismatic gold and the collector's gold. We see the commercials at 2 in the morning.
Yep.
But you're making money somehow, aren't you? How?
We are. So just like any other dealer, we make some in the bid-ask spread. So the physical market trades at a premium to the paper market because there's a fabrication charge, there's a transportation. But because we bid it out to these market of dealers, we're able to collapse that spread. And then we charge our clients for storage, which is a very similar charge to an ETF. So our real thesis is that we can make it as liquid and as easy to do as buying an ETF or the other products out there. You should always buy the real asset.
Let me ask you about the price of gold. It seems to have been stuck in a range for the past couple of months.
Yep.
What do you think is going to happen? Is it going to stay there, or is it set to break out or break down?
No, I think with the coordinated action of the central banks this week and the U.S. continuing to provide liquidity to all the banks in Europe, I think you'll start to see some momentum, especially with the possibility of the ECB cutting rates and maybe even the Fed cutting the discount rate.
Cheapens currency and strengthens gold.
Right. You know, in environments when there's negative real rates of return and getting more negative or moving more towards zero, gold does very well in those environments.
What's your price target? What do you think gold is going to?
You know, we don't have price targets. I think most people
Above 2,000?
I think it will. And I think most people look at the pre-1980s peak in inflation adjusted, but that's probably the wrong way to do it because so much has changed since then. There was no ETF then. There were companies like us, so access has changed. In the first half of this year, half the buying of gold was actually in Asia, particularly in China and India. So we have some dynamics that didn't exist before. So we try not to peg it to that.
Where do you keep your gold?
I keep it in Zurich. So I think,
why Zurich?
Because I think one of the advantages of having the real asset is you can add more diversification. So I can have a real asset, but I can also store it outside the country. So while all my other assets are stored in the U.S., if I can just type in a ticker and get it, I might as well do that too if it costs the same.
We're running out of time, but David and I had a gold guest the other day who said he stores his in London because the black helicopter theory, the Iranians are going to bomb Zurich because all the gold is stored there. Have you heard that crazy rumor?
Yeah, you hear these rumors. I think in the end, it's, you know, we partner with the best insurance companies in the world to protect you against things like that, but we want clients to have the flexibility to make the choice.
Savneet Singh, good to see you.
Thank
you very much. Congratulations on your success.
Thank you very much. The financial stock that could see gains even if Europe falls apart. Top analyst Brad Hintz joins us to name that name next.
Also, GNC, the vitamin company, they are hiring, they are expanding. We're going to be asking the CEO how they keep getting people to shell out big bucks for vitamins in this economy. It's a Fox Business exclusive straight ahead on After the Bell.